So, welcome everybody to the third episode of Off the Block 21 Shares new podcast, where my research colleague Max and myself talk about everything interesting on and off the blockchain. Today we have a very interesting guest, and both of us are very excited to having on the podcast Michael Terpin, who's been called the godfather of crypto by CNBC back in 2018. He has been an early advisor both to Ethereum and Tether, and also Ripple Labs and Gnosis and a bunch of other crypto projects. He's very much known to be a very early Bitcoin advocate, and also published a book, The Bitcoin Supercycle, which both Max and I have a copy of. We can very much recommend reading it. We didn't get paid by Michael for this promotion, so this is very genuine. And in today's episode, we're going to talk about what is Bitcoin, why investors should consider adding Bitcoin to their portfolio, and also very much about the Bitcoin cycle, because there's been quite a lot of different theories trying to explain Bitcoin's price performance, which also has been the best performing asset in the last 10, 15 years. And with this, I say welcome, Michael, to the podcast. Thanks for having you here, and very exciting to talk with you about all those interesting topics.
Thank you. It's a real pleasure to be here.
Great. And I believe, Max, we're going to kick it off with our 10 rapid fire questions that you always prepare for every guest. So over to you.
Thanks, Darius, and it's a pleasure to be here. Thanks, Michael, for making the time today. And for those of you who don't know Michael, this question or the answer to this question might surprise you, but Michael's been a real veteran and pioneer in the space for many years, decades even. And so, with that said, I think we can ask the first question, which is, when did you first hear about Bitcoin?
So that was in 2012, and I was curious about it, but I ended up sending someone else from my company to go and listen to a presentation because I had a conflict, and they came back and they said, "Oh, this will never work. They're smoking crack." And if I had gone to the same presentation, I would have gone down the rabbit hole, and just like I did, about a year later when I went to the first Bitcoin Foundation conference in March of 2013. The only difference is that had I gone down the rabbit hole in April of 2012, the price of Bitcoin was $4. And when I finally went all in, it was 120. But I saw just from being early in some other technologies, I got really excited about the internet in 1992 and started the business in the internet in 93. And then I got really excited about social media in 2000. And and then 2013 for Bitcoin. And pretty much in all the cases, I thought I was getting in late. I was like, oh my God, it's $120. I just met people who got in at 7 cents. I mean, how much higher is it going to go? And obviously, by the end of the year, it was $1,000, and now it's over $100,000.
I think that can speak a lot to people who now think that they're learning about crypto now, or they're learning about Bitcoin for the first time this year. Speaks to their experience as well. They might be thinking, "Hey, I'm a bit too late for this. It's already at 110, 120K." But as Michael just highlighted, the feeling is that you're always late. But that being said, I think it's true that for the people who feel that way now, they'll have missed a larger price appreciation than what you did when you missed it back when it
And,
was at
and,
around
and
four
you have to
dollars.
you have to talk either real dollars or percentage. I mean, the people who got in at 7 cents, there's no opportunity to do like a million X anymore, right? But if you're talking about dollars, if we're at $110,000 today, and I think it's, you know, an if and not a when and not a if in terms of hitting $1 million, whereas you couldn't reliably say that back in 2013 when the first people started talking about it being a potential of being $1 million. There was a report that came out. Gil Lurie, I believe it was from Wedbush, put out a report at the end of 2013 and said there's a 1/2 of 1% chance that Bitcoin could hit $1 million, and a much higher percentage that it'd be zero. It'll probably be somewhere in between. I think Bank of America then came out and said we believe in 20 years it can be $1,200, and obviously it's done much better than that.
Exactly. Well, thanks for that. And I think the next question is a pretty self-explanatory one, and I would be surprised if your answer isn't the Orange King. But what is your favorite crypto asset, and why?
Of course, it's Bitcoin. Bitcoin's the king. Without Bitcoin, you wouldn't have any of the other cryptocurrency. And it's not only the safest of the crypto assets. I think it's just the safest of any investment over the long haul. I mean, I talk to a lot of family offices, and they're very risk averse, and they confuse the volatility that happens within each cycle with the steady performance over a 10-year period. There's never been a 10-year period that you could have lost money, and over a 5-year period, I think it's like 1% chance that you bought and then panic sold at the wrong time 5 years later. It is much more reliable in terms of that than the Mag 7, than a lot of other gold, silver, real estate. I mean, they all have their crashes, and Bitcoin has always recovered strongly.
No, we fully agreed with that. For long-term investors, Bitcoin really presents the biggest asymmetric opportunity in the market, and we still believe that that holds to date as well, even as Bitcoin has started or continued to mature throughout the years. And now to switch it up a little bit, and I mean, you had been working or were an early collaborator on one of these projects, but if you had to make a pick now, what would you choose between Ethereum or Solana?
Oh, wow. Can I say B&B? I
You
mean,
can,
right.
but then we'd want to maybe double click on that answer and ask you why.
If you look at the fact that every cycle, altcoins typically they do the best against Bitcoin in their first cycle, and then when they pump 4 years later, they do usually less, even in dollar terms, but certainly less in Bitcoin terms. Ethereum has still not even reached its all-time high, or it barely did by like pennies, right? Whereas BNB is the only asset in the top, I think, 25 tokens that has consistently, garnered new highs, at least in U.S. dollar terms. And heard people say never bet against Vitalik. I'd say never bet against CZ. I mean, what he's done to build, and I think that Bitcoin is the only asset in crypto that I would say has a near zero chance of going under. It will be around 100 years from now. You can't say that about Ethereum. I mean, Ethereum. I'm hearkening back to the dark days of 2018 when Ethereum had went from 1,300 and then change to $80. And, I think it was David Schwartz from Ripple, I believe it was, that was arguing with Vitalik and saying that there's all these clones now, and that Ethereum has the highest fee, so that it really has no value. It'll lose to the clones. And Vitalik said, "Well, technically you're right, but," and then one of the things about charting and staking and everything, all anybody had to hear was technically you're right, and people pressed the sell button and went all the way down to 80. Obviously, it's recovered, but if you look at what Ethereum does between the layer ones like BNB and a lot of the layer twos that Ethereum works with but doesn't take sort of the monetary value. The percentage of EVM going through Ethereum is less and less every year, and there certainly could be. People talked about the flippening back in 2017 that Ethereum's value would flip Bitcoin. Of course, that never came close to happening, but there could be a flippening where BNB or someone else who's a clone could. I think we're getting close to, if you take all EVM compatibles, that are not Ethereum, Base being another one, that although they don't have a coin yet, that you may have a flippening soon in terms of adding up all of the EVM compatibles versus Ethereum. So I think that Ethereum's, long-term value, even though EVM is certainly the most, adopted standard for building, um, Solana has just only recently kind of moved out of like, meme only building to other things that rely on speed and low fees and consumer friendliness. So I think they'll both have places, but everything but Bitcoin is used for innovation. Because Bitcoin is so slow to to do anything to change their underlying structure. I mean, and that calcification is what makes it great as a store of value. And it takes so long to get, what is it, 95% buy-in from the miners and then get the core devs to build it, as opposed to Vitalik can just simply say, "I'm doing this," and it goes through. and that's a weakness in terms of long-term store of value, but it's a strength in terms of being able to innovate quickly. And so they're used for different things.
I agree with the use cases will differ by network, by chain, and we are believers that in the future there will be many different blockchain networks that are active and that are live. But also thanks for giving us an answer that we didn't expect, and you're actually the only one to not have answered Ethereum or Solana. So that was definitely an interesting little bridge there. And beyond the obvious projects that you're watching, I think it would be interesting to get your view on what projects are interesting this year or anything you might have your eye on for the rest of 2025.
I'd say that every 4-year cycle has a different narrative in
Hmm.
terms of altcoins. After the first halving, uh, year 2012 to 2016 was all about better mining. How do you make the whole miner still relevant? And that was Litecoin and Devcoin and Namecoin and things that don't even exist anymore. Sort of the dawn of proof of stake, Purecoin. The second after the second halving, the third cycle, is when you had the ICOs, and that was really the dominant, sort of narrative of the wave, and caused this huge 30x run up in Bitcoin price. Of course, the prior cycle was 100x, but that's because it started from like $12. The third cycle really was dominated by the ICOs were dominated by Ethereum, and then 4 years later, there were three trends that kind of dominated the overall crypto cycle, and they were DeFi, NFTs, and metaverse, and maybe a little bit of Web3 gaming, and those were all basically Ethereum. This cycle, you could say that the dominant themes have been RWA, X's, and AI, and those have not been built largely on Ethereum. I mean, some of them been on Base, some of them been on Solana, and it's still really early in that narrative, even though we're getting to the point of the traditional top for the 4-year cycle. The alts have certainly not been where they've usually been at this time. And so I think rather than asking is the 4-year cycle dead, because I don't think it is alt season, dramatically changed.
It's a fair question and one that we've actually wanted to and have uncovered a few times in our research team here at 21 Shares as well. We've also had that question from many clients. Where is the alt season, right? And as you've noted, I think it's kind of changing shape and metamorphosizing into something that it previously wasn't. Previously in cycles, you could, with reasonable assumption, place a widespread bet and have a wide range of where you're shooting and still have a reasonable belief that you might make positive returns. Whereas in this cycle, it seems to be more specific to the use cases that are tied to that asset. So fully agreed with you on that one. And my last question before I hand over to Darius, who's our bad cop. We're playing a little bit of good cop, bad cop here. You already stated some of the exciting trends that we've seen in this cycle with regards to tokenization, maybe stable coins, etc. But on that front, I would like to hear what do you think is a trend that's actually a little bit overhyped, and something that you think doesn't have as much substance as it supposedly has. Might have caught you
Boy,
off guard there.
yeah. I wouldn't say that it doesn't have substance, but I'd say it's perhaps Um, Bill Gates once said that most people overestimate what they can do in a year and underestimate what they can do in a decade. And I think that with RWA, people are thinking that the real estate markets are going to change within a year or two, and the stock market's all being tokenized. Regulations in the securities industry are just, particularly also with the national exchanges, just move very slowly. So, yeah, in a decade, I can see, what X stocks is doing right now in Solana as being something that's pervasive worldwide, and anybody can go and buy Apple on chain, but not next year, or at least not easily and not without challenges. Obviously, the fact that we now have a very pro crypto, pro Bitcoin president of the United States, has made some of these changes, and a very pro crypto head of the SEC with Atkins. Um, but the midterm elections are coming up next year, and if the Democrats win the House, you're not going to see much going on other than constant impeachment hearings. And if the Democrats win the Senate, Elizabeth Warren is back in charge of the House Finance Committee, and she's already been talking about trying to make all DeFi. This is a recent pending piece of legislation. All DeFi fall into the realm of broker dealers. So you cannot do DeFi unless you register as a broker dealer, which of course is insane.
Yeah, yeah. No, I'm with you on that one. I also think that the plumbing, while RWAs are obviously very exciting, and I agree with you, it's not going to happen overnight. I think the question comes to plumbing, composability, but also the regulatory piece. And as you said, if that gets kind of pushed back, we may see a little bit of a slower adoption of
And the same thing
tokenized
with
real world
AI, right?
assets.
I mean,
Yeah,
the same thing with AI, because if you talk to the big boys, I mean, I remember seeing a panel with somebody from like, OpenAI and Google and Claude or whatever, and they said, well, what about decentralization? They just laughed and they said the most advanced decentralized AI is like a fraction of the power of like some of our weakest competitors in the centralized space. They just said it's not happening. And that's not happening in the next month, but 10 years from now, I mean, I think the argument for decentralized AI is just if you're in a future world where your agent is going and paying your bills and like making reservations and doing everything seamlessly, do you really want to do that with PayPal charges every 10 minutes? And maybe PayPal will go in and just simply lump it all into one thing and have lower fees. But stable coins, which are obviously being massively adopted, it was up 8x in volume even before the Genius Act, are getting more and more mainstream, particularly in the global South.
agreed. Well, that's going to be it for now from my side, Michael. But thanks for the questions, and I don't want to be hogging the mic here, so I'll relay to my co-host Darius, who'll be shooting the next five at you.
Perfect. Thank you, Max. And I just want to say I love that even though today's topic is Bitcoin, we talk about so many like other ecosystems, altcoins, etc. And just shows like how much the space has evolved from just being Bitcoin as like the first cryptocurrency to like the ecosystem that we're having now. Even though Max said I'm going to be the back cop, I don't think so that's the case because the next question I have for you, Michael, I think it's a very easy one for you, is what was one prediction that you make and which actually ended up being true or correct?
We've had several. I spoke in the book about there was a controversy at the end of the last cycle about how the 4-year cycles are broken because you had a new all-time high a month before the halving, and therefore you were going to have an early high. We were going to have like a broken cycle. And I was one of the few voices that said that's incorrect. You cannot have the new all-time high of this cycle happen a month before the halving because that's by definition last cycle. And so what it did, and this was the first, was that you had a a delayed all-time high for the last cycle, cycle four, because of the ETF passage. So by my projections, I've been sort of looking at the data and seeing diminishing returns and diminishing losses for each cycle. If you go and look at the first cycle before the halving, the price there was no halving, but the price from the first quoted price of Bitcoin, which is 1/10 of a penny. That was, by the way, only a single sale. That was Marty Malky, Satoshi's intern, sold 5,050 Bitcoin for $5 on PayPal. That was the first sale of Bitcoin for cash. And so that was 1/10 of a penny. And then, a year and a half or so later, you had the pump all the way up to $30, and that popped and went down to $1. So your metrics there were you went up 3,000x from the first quoted price or the first, delivered price sale to the bubble popping and then very rapidly down. It didn't quite follow the four seasons because we hadn't had a halving yet. It went all the way down to $1. So you had a 3,000x run up and then a 97% drop. Now after the first halving, you ended up having a $12.70 halving price. It went all the way up to $1,240. So that was roughly 100x run up. And then you ended up when the bubble popped, it went all the way down to 171, which is an 85% drop. And then the next halving price was $670. And that went up 30x to 19,800. And then you had an 83% drop when it went down to about $3,200 a year later. And then the third halving was 8,700 as the halving price. And so I'm looking at 3,000x, 100x, 30x logical sequence of sort of like this diminishing returns on a logarithmic basis. Probably looking at about 10x. And so I was projecting that if it was 8,700, we could be targeting 85,000 roughly, plus or minus 20% for macro. And the first two cycles, you really didn't have significant macro, so it was really at that 100x and 30x. In the third halving, you had some significant macro factors. You had Biden's war on crypto. You had the sort of like um, almost utter destruction of altcoins, kind of an alt apocalypse, so to speak. And you had Biden's war on crypto coupled with the rapid rise of interest rates as we were approaching the traditional peak in 2021. And so instead of 10x, we ended up doing 8x. I think most asset classes would be really happy with 8x in a year. Imagine if gold went 2,000 back then to 16,000, or if the S&P went up 800%. I mean, they'd be apoplectic with joy. But for crypto, that was a disappointment. We weren't up 30x, we were only up 8x. But I saw this 10x minus macro, and you ended up having pent up demand that then sent us up to 9x in March of 2024, which was still that same cycle because of the ETFs going live. And that ended up pumping us to 73,850. But then a month later, when you had the halving, which has so far been neither overbought nor oversold, it's been as close to the fair market price of Bitcoin. I call it the Goldilocks price. And so that meant to me that the halving kind of sequence is still in order. And what it did do was it reset the price of the high of that cycle, the prior cycle, to 73,850, because a big part of my Four Seasons narrative is Bitcoin summer. So I think I'm the first person to have identified that the day that you hit the all-time high from the prior cycle, you have an incredible daily IRR. The day it hit $30 in after the first halving, which was the high of the pre-halving cycle, within a few weeks you were $250. And 4 years later, when you ended up hitting 1,200, that kicked off the boom to like 19,000 by the end of the year. And you were at around 2,000, a few weeks later. And that was actually more of a slow growth cycle compared to the other ones. And then 4 years after that, when you ended up passing 19,800 in December of 2020, within 4 months, you were at 60 something thousand. And so I projected that, this time when you hit the all time high, it would not be the all time high of the bubble popping, which was around 68,000 and change. It would be the new all time high of the cycle, which is 73,850. And sure enough, having it 63,900, it hit 68, 69 several times and did not anything. Usually Bitcoin spring, which is the day of the halving, starts that short season from 4 to 7 months so far. And it stays flat because for everybody selling a Bitcoin, because, the miners are stressed or they're, selling Bitcoin or they're turning off their machines to move to new jurisdiction, there's somebody else who buys it because they know that the cycle will go higher. It has every time. But they don't start buying in such quantity to shoot the price up until they see price discovery, which is the first day that you have a new all-time high. Well, that did not happen at 68,000. It happened at 73,850. And I projected in the book that that would be when we started Bitcoin summer at 73,850. And I projected that it would happen in 2024. And I projected that if Trump won, it would be early November. And if Kamala won, it would still happen, but it would be later in December. Trump won. We hit the all-time high on election day. I feel like that was a pretty good call.
I
A few
love your
weeks later,
elaborate
we were at
answer. Yeah,
$100,000.
love hearing that. And maybe, I mean, not maybe, we're going to ask you for some prediction at the end of the podcast. So we have very high expectations on you, so no pressure on you, Michael. Maybe just very shortly, what's one use case in crypto that you like the most and why? Just shortly, it can be anything.
Well, obviously, DeFi has been one that has let people get, double digits returns if they do it correctly. Same thing with, staking with, obviously, you have the underlying asset that you have to believe in. And altcoins tend to follow, at least in general, the 4-year halving because
Hmm.
Bitcoin. I've said for many years, when Bitcoin catches a cold, the rest of alts catch pneumonia, and you saw that very prominently the last few days when Bitcoin was down about 8%, and some alts crashed 90% before they rebounded to like being down maybe 40%.
I
And a
loved it.
lot of it
And
has to do
Max
with
and my
liquidity and like over leverage. Perp trading is, I think, we had $20 billion of liquidations.
and apparently the number is even higher. I was just reading today. Um, Next question I have, which I'm interested to hear because it changed quite a lot over the time, also in the years that I've been active, is what, in your opinion, is the biggest misconception people have about Bitcoin? Like in the past, it was stuff like it's great for money laundering or it's bad for the environment. But like right now, currently, what's, in your opinion, Michael, the biggest misconception people have about
I mean,
Bitcoin?
people still say those two, even though they've been debunked.
Hmm.
Even when, I think it was one of the, 3-letter agencies was being grilled by Elizabeth Warren, they said, well, no, 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 we're only seeing that like, tenths of a percent are you even suspected of, crime. And it's a much higher percentage of the big banks. The drug dealers don't go and when you bust a big cartel, you don't see a bunch of treasures sitting in their briefcase. You see $100 bills all in suitcases, and and for the environment, we've shown that actually 70% now of the mining is renewable resources. I mean, hydro has been very positive for being able to like help out the communities when they have like power disruptions from hurricanes or earthquakes. They can divert it over and sell back to the grid. So I'd say the biggest misconception now, particularly among a new class of retail investors who are traditional investors, which is that's the main reason why I wrote the book, was because I've been frustrated over the years because I have a lot of friends who are traditional investors, in tech stocks, in startups, commodities, in real estate, and I told them about Bitcoin being an iconic opportunity to create generational wealth back when it was $60, right? And I told them again at $200 after it went up to 1,000 and crashed again. $2,000, $5,000, $7,000. And they'd all go and say, "Oh, this is interesting. I'll ask my broker." And of course, the brokers weren't allowed to even talk about it. And if they did, they were like, "Oh, it's a scam. Look and see what Warren Buffett said." And they never bought. And they never, of course, did the research to even read the white paper. It's only 9 pages long. I mean, one reason why I, included the entire white paper and annotated it in my book is then if you read my book, you have to read the white paper. And if you read my annotations, hopefully you understand it. A lot of people who even look at the white paper, they saw a whole bunch of like math formulas in the middle and that scared them off. That was just, that middle part was just showing proof to other cryptographers that his system was going to work. But, I mean, I think one of the things that Satoshi said in the white paper that people miss out on is that he correctly stated so far that, and I think it will continue for the rest of cycles, which is another 100 and something years, um, is that as long as the amount of Bitcoin bought every 4 years between halvings exceeds the amount of new Bitcoin mined, which gets cut in half every 4 years, the price has to go up. Supply and demand. It's obvious. It's a truism. There's no way that it cannot be. If you're buying more than you're producing, the price has to go up. My corollary to that, though, and this is where people get scared off, is yes, but not in a straight line, right? And so people go, oh my God, it's so volatile. Well, volatility can make you money if you understand it, right? And so that's where I came up with my 4 seasons of Bitcoin theory in about 2015. And I identified that there's four, very distinct quadrants within every 4-year cycle, which explains the volatility. And it's based on fear and greed. Bitcoin spring is the day where the seed of the new season is planted, or the new cycle is planted, and that's when in one day, Bitcoin miners go from being slightly profitable to being massively unprofitable. If they're making 10%, one day later they're losing 40%. And you'd think that the price drops, but as I explained earlier, there are people who see that as a buying opportunity if price dips after the halving because they know that every cycle has gone up quite a bit. And Bitcoin summer is the day that even by a penny it exceeds the old all-time high, and 4 times out of four, that is the start of the parabolic run-up that happens usually for a couple of weeks, and then it goes flat for a while, and then you have some form. I mean, they say that 2017 wasn't a double bubble because it didn't really collapse in the middle, but it still kind of, went way up and then kind of like went shaky and then dipped a little bit. And then it went, the last couple of months, I mean, during the fourth quarter, it went from, I think in July, it was still 1900. And by the end of the year, it was 19,800. And so you've always had this bubble pop um, three times out of three. And, everybody who says the cycle is dead is saying, well, it's not going to happen this time because it hasn't happened yet. We are not in December. We are in, still the early part of October. We've had a pullback. There are pullbacks all along the way. If you look at the first cycle, there were five pullbacks of more than 35% on the way up to the parabolic high of 1240. And so, historically, you always have the bubble pop when it's around 90% or higher, fear and greed. And you always have capitulation when it's at 10%. When everybody's in maximum fear, it's going to zero, is the best time to buy. You can see on what's called the rainbow chart, and I reprint that in my book, where every single time that the bubble popped, it was at the top and it was like 90% fear and greed. It was like, at the top of the lines on this kind of like, rainbow curve. And every time that capitulation happened, it was at the bottom. And I don't see any reason for this all of a sudden dramatically changing. I mean, if 126, last week, was the all-time high, and we're going down from here, we were only at about 60% greed. I mean, there's been no, FOMO. There's been no, I mean, retail's barely getting involved, and I think they still will because retail, new retail in particular, aka dumb money, no matter what anybody says, I mean, they tend to react very emotionally. They tend to FOMO in at the very top because their friends have been making money. And then they panic sell at the bottom because, they saw on TV that it's going to zero and Elizabeth Warren said it's going to be closed down or whatever. And that of course allows the liquidity for people like me to sell at the top and buy at the bottom.
I mean, love hearing that. The last two questions we have in this section are, in your opinion, does Bitcoin need smart contract capabilities? Yes or no? Are you a Bitcoin purist? Are you in favor of OP-Cat? Yes or no? I know it's a very big topic, and but just shortly, yeah.
Yeah, Bitcoin does not need smart contracts, but it will get them. And Bitcoin's primary use case is store value. I like to say that Satoshi failed in his original vision. Look at the title of the white paper to be peer to peer electronic cash. But by creating the blockchain that was open source, that then enabled Tether and USDC to be peer to peer money. Now, it's not peer to peer decentralized money. It's regulated, at least particularly for, I mean, even Tether is now looking to be, under regulations in the United States, buying T-bills, et cetera. So, but it's still, I believe that in the future, and it's already starting to be this way in the global South, um, you're going to have your savings account in Bitcoin and you're going to have your checking account in stablecoin and you're going to move back and forth between them. And, we've only got 4% of the world roughly owning Bitcoin, and yet we're 95% out of Bitcoin. We're 95% mined. When we get, say, in the next 4 years to pick a number, 15% adoption, 20% adoption, where's that Bitcoin coming from? You're not going to find any Bitcoin on Mars. You only have 450 a day, and then it's going to go down to 225 a day, and then 112 and a half. I spoke in Hong Kong this last week, and I, I, I I gave a statistic that shocked people, which is, I was at a family office conference where they were talking about the next 100 years. Gold in the next 100 years is going to more than double its amount of gold, right? Because it adds about 1.5 to 2% every year. So that means it'll have 150% more or more gold to diminish its value per piece. I mean, it's not money printing the way that the Fed does, but it's still gold prints, about 1.5% a year. Bitcoin in the next 100 years, 5% total, right? And in the year 2021, 25, there will be about 15 years left of Bitcoin mining. Guess how much Bitcoin will be left to mine in the last 15 years combined? Any
I know
guesses?
the answer because I remember your talk, and actually I used this number yesterday with a friend. So I'm not saying anything. Maybe Max, you wanna guess?
I mean, the number is clearly way below even decimals that I cannot even name, I
It was
believe.
0.1
Okay.
Bitcoin for the entire 15 years. Yeah, when you get to the last year, it's like, 0.0000.
Yeah.
But yeah, I
So
mean,
in terms of percentage, yeah, we're
the
way
power
below one.
of having, right? Just like the power of, I mentioned in my book, there's a quote that says the power of exponential is that if you take 30 steps linear, you get 30 feet. If you take 30 steps exponentially, you get, I think, a billion feet. And so people underestimate what exponential does. And here, this is exponential in the opposite, going and cutting in half across. There's 33 cycles in Bitcoin before we have the last Bitcoin mine. We're only in cycle 5, and yet we're 95% out of Bitcoin.
I mean, I'm already in Bitcoin, but Michael, you're even creating FOMO for me now, talking with you. So I think that's great. The last question I have in this section is, if you had to describe the current stage of the Bitcoin cycle in one word, what would be this word?
Pivotal. For us to continue, and there's always minor variances every time. I mean, you had a significant double bubble in 2021 where some people feel that the actual top was in April and the second top because it was so much it wasn't that much higher than April was more of a long dead cat bounce with a wick, as I think is what Benjamin Cohen called it. So you've had a couple of changes, but you haven't had, I mean, several analysts 4 years ago were saying the cycle's dead, and they were saying that, or they were saying it was elongated. They were saying the first cycle was 12 months from having the high. The second one was 18 months having the high. And so they were saying that the third cycle was going to be 24 months, and so we'd hit the high in May. And enough people said that I actually held off on selling some Bitcoin at the actual high because I wanted to make sure that they weren't right. They were wrong, and anything I held on to May was like significantly down. And until proven otherwise, I think that we're still looking at the traditional, parabolic run up in the fourth quarter. I mean, obviously, it hasn't happened yet. We've had an all time high, but it was just from 15 at the low is still significant, but it's only a little over 2x from the halving. And I'm projecting that it should be closer to 3x, plus or minus macro of 20%. So the minus 20, so in other words, negative macro would be that fear of tariffs is the predominant vehicle, and that everybody, like whenever Trump says anything, I might raise this, I might raise that, just gets wrecked again, and we never get above maybe 150-ish. I think that's my worst case scenario. I just don't see that, that this was it, and we never had any kind of FOMO. We never had retail getting involved. Now, retail this time is going to get involved in a different way. Some of the traditional things that they look in terms of like when is retail FOMOing in is they say, oh, how many people are watching, crypto YouTube? The current crop of newbies is not watching crypto YouTube. They're either watching if they're the younger buyers that are new, or they're looking at Charles Schwab. And
Younger buyers would be an example of Max, for example.
yeah, because they're looking at buying in their 401k. This is not the 25-year-old degen. It's the 45-year-old married couple that keeps on hearing friends that made money in Bitcoin, and they're like, okay. I guess now that I can put it in my 401k, now that my stockbroker says it's okay to buy at 110 when they were telling me it's a scam at $110, now it's 110,000. Uh, they're feeling okay. It's safe to go in, and when they see all of a sudden it go, if it follows my projections and it goes to like 150 in the next month or so, they're going to be like going, oh my god, I just saw that it's going to be $1 million. I mean, look, I mean, Kathy Woods, who I know you guys work with, has said that it'd be a $500,000 this cycle, right? One of your spokespeople also repeated that on an interview I saw. And I don't think that we are going to hit 500,000. I think that's a bridge too far this time. If we got three more legs up, right? Because for us to get to 150, it's going to happen quickly, and then there'll be a pullback, and then the next leg up, which I still think we're going to get 150 in October. And I know we only have, whatever, like not even 20 days left. if we don't, then all sorts of things are very different, and you have to go and analyze what's different. Is it an elongated cycle? And I don't see the elongated cycle, if it does pass beyond December, going much longer than, like, January or February. That's about as long as the alt cycle lasted before it popped in 2018. But you still had Bitcoin pop in late December. People saying that it's going to top out next year at the end of the year. I just don't see the kind of fundamental math behind a 5-year cycle instead of a
Mm-hmm.
four.
Mm-hmm. I love, Michael, how you cover already quite a lot of points that you wanted to talk with you during the podcast, but it comes just naturally out of you. Maybe going a little bit back to the basics, since our audience is very broad in terms of like education level on Bitcoin. Very simply speaking, I was just interested. How would you describe Bitcoin if someone would ask you, what is Bitcoin? What made you excited about getting into Bitcoin, talking about it publicly? Um, so, very simply
So
speaking, what's Bitcoin
the
for you?
way that I explain it to people who are skeptics is that Bitcoin is the mathematically based separation of money from state. In thousands of years ago, you had gold that was not controlled by the government, right? I mean, they would own gold and they would print coins, and if you were in this kingdom or fiefdom, you had to use their gold coins versus other gold coins. But gold still had an international value, and people hoarded gold. I mean, it's been very broadly distributed. I mean, the average person on Earth owns 1 ounce of gold. The average person in the U.S. owns 2 ounces of gold. And you've got families in India that, I mean, they very highly prize their gold, right? They've got gold jewelry. Same thing in China. So gold has been very broadly distributed as a store of value for 6,000 years, and it's still obviously proved to be a great store of value. I mean, this year, it's now become of the narrative of you know um, what it had been for a long time, and people started questioning it when it just stayed flat, when you saw monetary debasement. But now that it's at such an extreme level of money printing, that it's $1 trillion of new money printed in the U.S. every 3 months, the gold bugs are now coming in, very hot and heavy. And obviously, we had $4,000 gold, which I don't think anybody was expecting the start of the year, when it wasn't even 3,000 yet. And but Bitcoin is now part of that narrative. It's digital gold. And when people tell me, oh, well, there's no use case for Bitcoin, at least with gold, you can make jewelry. Well, you can make jewelry out of copper too, and plastic, quite frankly. It's really the scarcity and the desirability and the historic use as a monetary instrument backing currencies. And with Bitcoin, its use is the first time you have an asset that you can sell for value to anybody anywhere in the world, as long as they have the internet, and nobody can stop it. And that is a powerful thing. That's more powerful than making jewelry. And because it's also the largest, I mean, you could argue that you can, send Dogecoin to anybody in the world too. But the acceptability, the long-term stability of price. I mean, I don't see any government, going and saying, we're going to go like El Salvador did with Bitcoin, that we're going to do Ethereum, or we're going to do Cardano, or whatever, right? Hedera, Dogecoin. And but I see more and more governments, just like a lot of governments. I think there's about more than a dozen governments that just gave up on the central bank idea, and they just said, we're going to use the U.S. dollar as our, and that's a horrible idea, right? I mean, I think Ecuador is one of the countries that use the U.S. dollar instead of having their own currency. That means that all of a sudden you're relying on something that you don't control, you don't print, and you're the victims of the inflation, instead of having at least some benefit from you know being close to it and being able to have your government determine what happens to it. Which is why, there's been this big effort to move away from the US dollar as the global reserve currency. You've got the BRICS trying it. You've got, the petrodollar has now been shattered, and you now have, a lot of people, going and saying, I want to go and, buy my oil in RMB, or in some other. And, as we have the fight for the next global reserve currency, because it wasn't always the dollar. Before that, it was the pound. Before that, it was the Spanish real. It was the Dutch guilder. I mean, usually, uh, a global reserve currency, lasts maybe 100 years. And I think the next one, it'll either be, you know, a bucket of currencies, or it could just simply be Bitcoin.
Great. Well, I think we got some really good answers, not only on the rapid fire, but also on the topics that we wanted to cover throughout the session. So thanks a lot for that, Michael. But I think, for those of us and those who are listening who are maybe not familiar with you, which shame on you, you should be doing your homework before listening to our podcast. But I think also for myself, it'd be great to hear a little bit about your early career, from an early believer of the space to an industry architect, and really why the name, Godfather of Crypto really stuck. Admittedly, I would have been at school still when you were doing a lot of your early developments. So even for me, a lesson in history would be really
Yeah, sure.
valuable.
So,
I think you haven't been born yet, Max.
yeah, so I have the blessing and the curse of noticing trends early. I kind of got really excited about the internet, which I'd heard about since the late '80s, back before they had the browser. But as soon as I saw the browser in the early '90s, I was like, "Oh my God, this is going to change the world!" And I dove in and I actually started. One of the first, kind of like native internet companies. I started a company called Internet Wire, which was the first internet-based press release distribution system, because I was running a tech PR firm at the time. And I just saw the internet and just almost completely pivoted into just going after early internet companies. And that was very profitable for me because, all of a sudden by the end of the decade, they were like just fast movers. And, I sometimes would take, you know, stock options along with my compensation. And so I had some 10x and 50x's along the way when that happened. Um, and then I got in very early to social media, in like 2001 era. And I'd seen like sort of arguably the first social media was really kind of the communities. Zoom.com was a company that I was that was actually my 50x that I did the PR for. And got stock, at a 25 million valuation. And they went out over a billion. And, and GeoCities, and then, they're called communities. And then, a little known company called Rise, RYZE, did everything that Facebook did, but they didn't go out and raise venture money. And so, when MySpace came out and then Facebook came out, they rolled over everybody. And, people were very skeptical in the early days of social media. Why do I care what you have for breakfast? And now, of course, it's a ubiquitous global platform and defines really too. Web 1 was read only, but it was still powerful because you could actually publish something and you would have a global audience, at least had the ability to see it. And then, Web 2 was read write. And Web 3, which I discovered in like, 2012, 2013, was, read, write, and own. And the ownership level of assets, there's a big difference, I like to say, between digital files and digital assets. A digital file is awesome because you can go and copy it infinitely, right? For the first time, you could take a photograph, post it on Facebook, and 2 billion people could download it and have similar quality. That doesn't work for money, right? You can't take a dollar and replicate it infinitely. It debases the dollar. So the fact that you can actually on chain provably take a store of value, whether it is $10 in Bitcoin or $1 billion in Bitcoin, and move it from one place provably to another, and then they can spend it and nobody can contest it. I mean, that was the game changer that Bitcoin was all about. And I kind of recognized that early when I went down the rabbit hole, read the white paper, and went to the first Bitcoin Foundation conference and saw all the brightest people I knew from the early internet, coming out of retire to go into Bitcoin. I was like, okay, there's something here.
Thanks for that. Really, really clarifies your journey. And admittedly, I wasn't there for Web 1, but I do think that we've progressed significantly since just having read-only interfaces. But I would say that your experience and your ability, and I would call it a blessing rather than a harm to yourself, but your blessing of being able to spot these early trends means that I think, the audience would really also want to hear from you with regards to this cycle and where we're at now. And I know we covered some of these things in the earlier questions when we did the rapid fire questions. But in your view, and I know we talked about this already, are we nearing the end of the cycle? And I know you stick to your 4-year cycle view, and that we don't have an elongated cycle, even with the institutionalization of Bitcoin and
Yeah.
crypto that
I
we've
think the
seen.
institutionalization,
Hmm.
is, you know, in the top of the 2017 cycle, the day that the bubble popped was the day that CME allowed options trading and or futures trading, I think it was. And people are going like, "Oh my God, it's going to the moon now that Wall Street can come in and like go long on Bitcoin." And a good friend of mine who's been spot on in terms of like trading, Jim Lowry, I mentioned him a few times in the book. He sold all of his Bitcoin that day. He said, "If he goes, I know these traders, and if they can go long, they can go short, and if they go short, they'll be able to go and play all sorts of games and drive the price of Bitcoin down and profit, and then buy up and then profit, and he's like play all the games that like the Citadels of the world have played for decades with stocks, and he goes, and if they can do it, they will do it. I'm out." And I heard him and I disagreed with him. I sold some that day, but not everything. I have a fund manager who did sell everything that day and believed him, and he was right. And he also was somebody who's been very good at picking the bottoms. In 2015, he decided to go on a peanut butter and jelly diet for the whole year because he said, "I do not want to sell a single Bitcoin at under $1,000." And so he went and ate peanut butter and jelly sandwiches. I mean, I had a wife at the time, now ex-wife, who was like not willing to eat peanut butter and jelly sandwiches. So I did sell some Bitcoin, and obviously every Bitcoin that I sold at a couple of $100 was like 500x if I'd held on to that Bitcoin.
Yeah, yeah.
But I think for the most part, the cycles, have some variation, but I'm still a believer that uh, the most likely path is that we do, hit 3x the halving, plus or minus macro. 193K would be if we hit it exactly. If the bad macro from tariffs and, government shutdowns don't seem to have affected it much, but, it would be 20% less. So that would put you at like maybe about 155, I think, or something like that. High end, uh, you could, go up to about maybe what's 193 times plus 38? Somewhere in the 220 something range, 230 range. If you go above that, that's when I believe the super cycle has started. So most of the book talks about explaining Bitcoin, why it's been a great store of value. Most of the chapters talk about the four seasons of Bitcoin, which I've mentioned, spring and summer, which are easy to determine. Spring is on the calendar. You can see every 210,000 blocks. We know the next halving is coming in late March, early April of 2028. Bitcoin summer is easy using just, a calculator. Is it $1 more than the old all-time high? You should buy. Because on a dollar cost averaging, I mean, sorry, on a daily IRR, that's almost the best time that you can make money because it almost pumps for the next couple of weeks, and then it maybe flattens out a little bit. You also do really well at the end of the cycle, which is historically when you get your final FOMO pump, and we have not had that yet, and that doesn't mean we're not going to have it. And but if you go, the super cycle effect is we have to look at an overlay of the diminishing returns that have been a reality, 100x and then 85% drop. And then 4 years later, we had 30x and then 83% drop. There's been arithmetic drops versus logarithmic drops in returns. Then we ended up should have had a 10x, but it was an 8x. And then we had a 75% drop. There's just no way that we're going to go and, have like 0% drop this time, as has been suggested by Bitwise and others. And I don't think we're done at 2x. Because again, we've had none of the indications of the end of a bubble. Bull runs typically in almost every asset class end with bubbles. And in Bitcoin, it has historically happened very quickly. And, if in 3 weeks we're at 150 and we have like a $15,000 day, people aren't going to be like, "Oh my God, I got to sell." They're going to be like, "Wow, it's going to 300K," just like, Kathy Woods and others said, "I better buy." And that's the more likely scenario that I see by the end of the year.
Thanks for that. That clears it up. I just want to double click on the entry of institutions real quick because
I was going to
uh,
say on the entry of
sure.
institutions. So institutions are not buying for their own account. They're buying on behalf of retail, right? I mean, the ETF, they're not just like buying it and putting it in Fort Knox. They're buying it because they've convinced retail. Well, retail, and they're typically new retail, they may advise them not to sell when the price drops, but the husband and wife are talking there. It's like, honey, it's down 20% this month. We better sell before it goes to zero. And they push the sell button. And you've seen that so far in the ETFs. When things are going up, you have a lot of people buying, and when they have a pullback, you do have people selling. And so I don't see that part of the institutions. The one part of the institutions that may that has not really come into full force yet is there's what $50 billion worth of DATs, digital asset treasury companies that have committed to buying Bitcoin, and most of them not bought it all yet. They've just committed to it. And so if they're committed to buying it, and most of them are Michael Saylor like in that they're going to hold and never sell, where's that Bitcoin going to come from? So you have to have, a supply shock, a supply squeeze, a supply shock at some point during the rest of the cycle. As of last week, I was told by somebody who was sourcing, OTC Bitcoins that there's only about 170,000 Bitcoin at all exchanges in the world. And, Trump right now is talking about, if they pass the Bitcoin Reserve Act that, Cynthia Lummis has proposed, they're talking about buying 200,000 a year. Well, there's only 170,000 out globally. Where's that Bitcoin going to come from? It has to come from current holders who aren't, going to jump at the first price offered.
Maybe I wanted to follow up on this, Michael. Like we in the 21 Shares research team, we created like a couple of like stats, etc., which shows that like companies are buying more Bitcoin that it's being mined. ETFs are absorbing more Bitcoin that's being mined. Obviously, demand and supply. Also explaining like the current price performance. I would be interested in what your opinion is actually on Satoshi Nakamoto because he still holds 1.1 million BTC. Do you think that will ever hit the market? Has she, they passed away? They don't care. What do you see with this 1.1 million BTC? And also, additionally, the roughly I think 3 to 4 million Bitcoin that's currently lost. Do you think that's also lost forever?
Okay, so two separate questions. Satoshi has not sold a single Satoshi. And there's several explanations. One is that he doesn't want to go and, stress out his baby and have it 90% drop because there's a fear that he'll sell everything until it's a much larger asset class, at least $1 million of Bitcoin. But, depending on who Satoshi is, and, you know, there are a lot of OGs that still believe that Craig Wright, even though he lost the court case, is part of Satoshi. And if you look at the court case, Dave Kleiman, four of the people most suspected of being Satoshi, two of them are dead, natural causes. And well, really with Dave, it was a motorcycle accident. Then, he died of natural causes afterwards. But, there's a lawsuit about, him and Craig Wright kind of splitting the early Bitcoin that they had. And his brother apparently had a whole bunch of like, sticks that apparently he may have destroyed what Bitcoin that Dave Kleiman had, which could have been hundreds of thousands. And there's a lot of there's other people suspected of being a Satoshi who've said, I burned it all when the CIA started asking questions, and so there's certainly a less than zero chance that it's gone. And again, when it's gone, that means gone until you find the keys, right? So I think of the lost Bitcoin and the Satoshi Bitcoin. When we get to the point of quantum computing being a threat to SHA-256, which we are still very far away. I mean, it's been estimated, I think you need 20,000 qubits, and I think we're at about 15 now, not 15,000, just the number 15. So we're orders of magnitude away. And again, who's going to go rogue and, start attacking, banks would be the first target because they're SHA-256. Who's going to do that? The people who have that power, like Google, Microsoft, are they going to go rogue and start stealing Bitcoin? I don't think so. And I don't think North Korea can just steal the code. They need to have the processing power too. So, but when you get to the point where it seems conceivable that, Bitcoin wallets could be cracked, you're going to have new layers of protection put on. There's already a lot of people looking at quantum safe wallets, quantum safe wrappers, etc. So those who still control their Bitcoin can move into a quantum safe environment, in the next 10 or 20 years when this becomes a threat. Those who've lost their keys cannot, right? So if quantum really does have the capability of opening up any wallet that's not quantum safe protected, then Satoshi's keys, if he's not moving them over, they would go back into circulation through whoever's able to go and crack them through.
I think this makes very much sense. If you go back to the basics of investing, somebody who doesn't have any crypto Bitcoin allocations yet, and he wants to get into Bitcoin because, again, his friends made a little bit of money. He heard about it in the news. There was a new all-time high, etc., etc. What are your tips or recommendations for somebody who's
So
just getting into Bitcoin?
anybody who is a millionaire should immediately go and buy one Bitcoin. Because that's a rare thing. Only 900, it's kind of between 900,000 and a million people are whole coiners, and there's only 5% left, and it's going to be mined over a long period of time. There's 56, 57 million millionaires in the world. If every one of them wanted to have one Bitcoin, they couldn't have it. There's not enough Bitcoin, you know, overall 21 million, much less the amount that's left for sale. So being a whole coiner is going to make you a millionaire when Bitcoin is at $1 million, which I think is going to be in the next 8 years. So how many other, investments can you say that you've got a pretty good chance of making 8x on your money without a lot of downside? So if you're just upper middle class and you're not a millionaire yet, you should at least start dollar cost average again and, go and, I would say not to dollar cost average in after the bubble pop because you're just going to be buying into lower lows. But if capitulation hits the way it has the last few cycles, we should be looking, I believe, at like about a 2/3 drop. So if we hit 180 as the high, we could expect a year from now being at about, 60. And of course, that's when everybody's like panicking, it's going to zero, and that's the best time to buy. The day that FTX hit and everybody's screaming that it's going to zero, even the whales were putting in orders at 5,000, 10,000, and then they eventually bought it like 17 or 18. You could have had a whole Bitcoin for $15,000. Most people could have afforded that in 2022. Now it's going to cost you $110,000. So, but next year, you should be able to get it at some point under 100,000 again. And probably between 50 and 80,000 if we hit a high between 150 and 250. There's a broad range.
But yeah, now that we're reaching the end, I honestly wish I could have a whole afternoon with you to actually help me set up my portfolio for the end of the run. But unfortunately, I don't have you the whole day, and I just have to get some quick answers from you into what we are looking for in the next couple months and years. And you've made so many right calls in your career that I think it's only worth it hearing a couple predictions from you. So I think the first one is quite obvious, but given that you've already talked about this throughout the podcast, but what is your cycle top price prediction for this cycle? If you
Well,
had to give a number without inclusive of macro.
I would probably say 180,000. I think it can go considerably higher, but that's a little bit sub macro because right
Hmm.
now it seems like tariffs are, not out of people's minds yet. And obviously, anytime Trump tweets something, it can disrupt a rally. And so I don't know if that's something that, you know, he's doing intentionally because he's obviously a big Bitcoin holder, or whether it's just coincidence that he's just doing it to try to, keep China in check. But it's while we still have, you'd think people would have like been over it after April and know that when he says stuff, he always pulls back on it. But so far, there's still
Taco
a lot
trade.
of, kind of macro risk of things pulling back. And so when we get close to the all-time high, if he tweets something, that may end up popping the bubble. And so I would say 180 is probably my current projection, which is still,
Hmm.
percent up from where we are, a little bit higher.
Yeah, no, I'll be placing a buy order right away after this podcast. More long term for you, but do you think Bitcoin would ever lose its number one spot within the crypto industry?
I think it's unlikely.
Hmm.
It's had competitors before. I mean, right now it's actually been gaining. It's over 60%. And the I think it's got a lock on store value, and it's the only one that's like truly decentralized that is controlled by nobody, is already getting government interest and adoption, and that's just really hard to catch up with. The 16-year track record. I mean, Ethereum is something that is very, I like the phrase. I forget who said it. It's like Bitcoin is digital gold and Ethereum is digital oil. You do things with it, and I think that I'm not a Bitcoin maxi. I call myself a Bitcoin preferentialist. So I believe in the right because a lot of pure Bitcoin maxis are like anything that's not Bitcoin is criminal and Vitalik should go to jail and like, it's a scam. And, I don't feel that way. I feel that it's open source code and most, top crypto projects, obviously there's scams in every industry. But most crypto projects are well-meaning. If they fail for the reason that 95% of startups fail. They just have poor execution or poor vision or whatever. It takes a lot to go from zero to 60. And kudos for folks like Solana having done it, and and Aster and like all sorts of ones that have made it into the top 100 tokens. But that doesn't mean they're going to be store of value to compete with Bitcoin.
Agreed with that. And given your view that you think Bitcoin will remain king, I think it's worth looking the other direction as to what Bitcoin can tackle. And in that front, we've talked a lot about Bitcoin becoming the digital store of value for the generations to come. And in that, it means it could potentially continue or start eating more of gold's pie. So I guess a very long-term view, but in the next 10 years, how much do you think Bitcoin's market cap will cover compared to gold? Around now, I believe it's 10% coverage, roughly. That's around
Well,
the
gold will
average at
not
the
remain
moment.
static, right? I mean, gold
Yeah,
is
exactly.
4,000 today. If we, in the next 10 years, do we, just have a continuation of what's happening now, or do we have a bubble popping and a global reset? So these are things that we can't know. If we have a global reset, I mean, gold could easily go up to $10,000 quickly, right? And the amount of gold is growing at 1.5% per year. So I think now we're over 30 trillion for gold. And if we hit $1 million Bitcoin in the next 10 years, that only puts us at 21 million, right? And they're actually 20 million because we still, don't have the last million mined yet. And if we go, say, in 10 years to 2 million, that makes it 40 billion, but that's still shy of where gold's going to be. I mean, because gold could be, in the 60 to 80 million, sorry, $1 trillion range by then, maybe as high as 100 trillion. And for it to be Bitcoin, equaling that would have to be probably around 5 million. Now, Michael Saylor puts, 5 million, I think, as kind of, I think he had his mid case in 21 years, and he loves that number, as being 13 million. His worst case is being 5 million, and his best case is being like almost 50 million. I think we could be 50 million in 100 years. I don't think we're going to be 50 million because, again, you got to realize that, like, what's inflation going to be by then, right? I mean, uh, you know, $50 million Bitcoin, is
No,
not
you're
as
right. Yeah.
when it costs, $1 million for, a dozen eggs.
No, agreed. And with these long-term projections, there's a lot of variables that are difficult to account for. It reminds me a bit too much of, macroeconomics class back at university. So I think the more reasonable projections are what we can expect in this cycle and the more nearer term dynamics that are easier to measure. So
But I do think
anyways,
that Bitcoin will flip gold at some point. It's just, probably more like 20 years from now. I mean, 20 years from now, I could see, you know, gold being 100 trillion, and I could see Bitcoin being $5 million a token. Because again, just there's just
mhm.
a lot more adoption. If you look at people under 40, people over 40, and you ask them if you had $1 million to put into a hard asset, how much would you put in gold and how much you put in Bitcoin? I don't think people under 40 are going to say, "Oh, I'm going to go 90-10 gold." It's probably the other way around.
Yeah. No, with you there on that one, and we at 21 Shares do strongly believe that Bitcoin will slowly and surely take that role a little bit of gold that it has started to show in this cycle, and people are coming to a bit of fruition of that being Bitcoin's value proposition, but it's a long road ahead still. In the meantime, we unfortunately lost Darius. He is frozen on my screen, but that's all good. This is a part that we will cut out as well.
Okay.
But I just want to wrap up this section with you, Michael. It's been a pleasure. Firstly, thanks a lot for making the time. I know you met Darius only a few weeks ago, but that's a little bit of Darius's skill as well. He's a good talker, and he's always very excited about the crypto industry. And given your history within our industry, it was a no-brainer for us to invite you on this podcast. But we hope that you enjoyed. We hope that we get to talk to you again at some point, and when your predictions inevitably come true about what's happening in this cycle and beyond, we'll be sure to give you a ring. So Michael, thanks very much. Huge thanks to the godfather of crypto, of course. And if you have any last words, please share them. Again, Michael has this fantastic Super Cycle book, which I invite everybody to read. And I think it's one of the first educations that I had to the crypto space. And I think it's well worth a read for everyone. Once again, Michael didn't pay us to say that. We just think that it has a lot of educational value. Keep in mind to please subscribe to Off the Block on Spotify, on Apple, on YouTube, wherever you may be listening. Follow 21 Shares for any market insights, updates on ETPs, ETFs, and on-chain intelligence. And yet again, thanks to you, Michael, for this time. We hope
And
you
people can
enjoyed this
follow me
episode.
at Michael Terpin, my name, on Twitter and LinkedIn and other places. I have my name on just about everything.
Great. Well, with that said, thanks a lot, Michael. Here's Darius from the other side of the podcast room. He can't hear you now, but he apologizes. I think he had a technical issue on our front.